Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex and gold fundamental and technical analysis. If you're new, a warm welcome to you, and if you're returning and watching my videos every week, an equally warm welcome back to you. And don't forget to like, subscribe and share if you find the videos I provide every week of use. And thank you to all the positive comments in the you guys have been posted in the comment section. I really do appreciate the positive ones. And before we get started into the week's analysis, just wanted to go over a fundamental question, bit of fundamental education, and really the poll was: what effect should reduction of bond purchases by a central bank have on a currency? And 203 votes, 77% of you voted currency appreciation, and 23 voted currency depreciation. So the actual answer is currency appreciation. The reason why is because bond purchases from central banks, banks have to increase their balance sheet, and by increasing their balance sheet, they're really increasing the money supply, right? So they're increasing supply of an asset to buy bond purchases. So if they're increasing supply, then prices should move down, right? Because there's more supply than demand. But if they start to reduce bond purchases, meaning they're reducing their balance sheet, reducing the supply or the amount of debt that they're buying, because bonds are basically debt. So if they reduce the amount of supply and reduce their balance sheet, then the reduction of supply should cause currency appreciation. So well done to those of you, the 77% of you who got that question right. And I'll be going over some other questions in the upcoming weeks. So now when you're looking at fundamental news and analysis, you now understand that when central banks are starting to talk about tapering bonds, meaning the reduction of bond purchases, that should have an appreciation effect on the currency, right? The currency should strengthen when you start to see reduction, tapering of bonds, and increase in interest rates, etc. Anyways, let's get into this week's analysis. And just in case you're new, our trade process is to really apply fundamental analysis to establish trade direction, and then apply technical analysis, so our supply and demand strategies to time trade entries, establish profit targets, and risk management. So let's get into the upcoming week's fundamental analysis news, and let's zoom in on the week ahead. And the US, China will be publishing inflation updates for July in the coming week, while second quarter GDP releases from the UK is really what we're looking at. And factory production numbers from the Eurozone will also be keenly watched. Other important data follow includes US consumer confidence, Germany trade balance, Japan current account, and Australia business morale. Elsewhere, central banks, those are currencies that we don't trade. So for me, really the really important news is going to be inflation, which is probably expected to be high in the US anyway, but the UK second quarter GDP should be positive, and we'll get into some UK news as the pound, the central banks have, Bank of England anyway, have signaled that they're looking to hike interest rates, which is positive, but the data has to support the narrative. Before a rate hike can happen, the data has to support that decision. So let's get into now the technicals and a bit more in-depth fundamental analysis, starting off on the dollar index, DXY. And the dollar index, last week we had a really nice move off of this demand zone, and the dollar index is just a measure of dollar strength against the major currencies like the euro, the yen, the pound, and the Australian dollar. And what we've had from last week is basically prices came down into this demand zone, and then we had again positive news, and really it was really driven by the expectation for jobs. So US jobs, everything you could want and more. So the US jobs market has posted a solid set of figures for July, with employment gains exceeding expectations, unemployment falling, wages accelerating, and the participation rate increasing. Momentum is building towards early Federal Reserve policy action, and that's what really drives prices in the medium to long term, is understanding GDP and where we are in the business cycle. Are we in the recovery phase, the expansion phase? And if we are, then the currency should appreciate, and employment and jobs is one of the markers that we use to understand whether a currency is strong, right? So again, last week the expectation of that came into play. We had a bit of a pullback into that nice zone, and then we got the news on Friday, positive jobs news, and then we had the dollar really start to go higher. So again, if you're looking for any kind of buy trades on the dollar, we just use this as confluence. So any kind of pullbacks into a demand zone is a buying opportunity, and as long as the data supports the narrative, we should be on the upside. And I have been saying that if anything, I'm probably long dollar in the private mentoring group. The guys know that the currency pairs I've been trading against, the dollar, like the yen and the Swiss franc, and as long as risk stays on, basically it's buying. It's really kind of buying the dollar against the weaker currencies. If you do think that the dollar may start to get weaker, then you're looking at somewhere around this zone to look for short trades. But as I say pretty much every week, fundamentals really and risk sentiment is what drives market valuation and drives price in the medium to long term. There's no technical analysis level that's going to stand in the way of any kind of fundamental bias, right? So just because there's a supply zone here, the chances of it working out when you've got strong dollar buying potentially is slim. Not to say that it won't. There might be some profit taking up here, but as long as we've got positive sentiment and the expectation of Fed tapering and a rate hike potentially on into the next maybe 6 months to a year, or probably about a year or so, then the market is going to look to price that in. It doesn't look or take cues or take direction from technical analysis. So I think the dollar is on the up and up, and as long as again data supports that narrative, we should continue to see dollar strength. Going into the dollar yen, and again dollar yen did come down to a zone. In fact, this really should have been drawn from here, and that's where prices did come down into, because you've got the last bearish candle before prices make new highs, right? So that's where the strongest area of demand actually is, and then prices came down into that 108.90 area and then pretty much bounced from there. Really nice trade that. And again, positive sentiment, risk on. The Japanese yen doesn't do well in a risk on environment, so pretty much this is what you're going to continue to see. Will this supply zone hold? Maybe not, but I'm going to get rid of that and just pretty much say, if you do want to get short at any point, then yeah, as long as prices come into this supply zone, there is a supply zone there. But for me, I think demand and buying the dollar is really where it's at. So if we can create maybe some higher lows and higher highs, and pull back into that zone would be really nice for a buy trade. Or if prices can come back to this 109 area, that would be quite nice for a buy. Moving on to the dollar Swiss. Didn't quite come into this demand zone down at the lows, but now it's created proof of value, has created a nice demand zone there. So if prices ever do come back down into this zone, that is going to be a really nice buy trade. For a sell trade, you're looking at this area here. But again, the Swiss franc is really not the the currency to buy in a risk on environment. If risk starts to come back off again, concerns about the maybe global growth, China slowing down, the coronavirus spreading, then possibly you could see look for short trades if prices come up into that zone. But for now, I think the market is really kind of forward thinking, and I think the dollar really is the one to buy at the moment. It's positive sentiment all around. Dollar CAD, it's a dollar CAD. Again, this is again two currencies that are kind of competing with each other. You've got the US, which are potentially hiking rates, as well as Canada hiking rates. And Canada didn't have the greatest news on Friday either. So Canada jobs recovery continues in July amid reopenings. So the nation adds 94,000 jobs in July, mostly full-time positions, but the gain was less than the 150 jobs expected by economists. But there was some positive news, was that the unemployment rate fell to 7.5 from 7.8 in July. So unemployment is moving in the right direction. So again, you've got two currencies, Bank of Canada as well, two central banks, I should say, Bank of Canada and the Federal Reserve, looking to hike rates at some point in 2022, 2023. So when you've got two currencies that are really, looking to strengthen their currencies, it's a harder trade, right? What you actually want to look for is a currency that is looking to obviously hike rates, and then against a currency that is not hiking rates anytime soon, is lagging behind. So that's more of the way you would find the divergence, right? That's what is known as divergence trading. So with the dollar CAD, for me, it's more of a difficult read. And when it's more of a difficult read, then pretty much I personally am not trading it. But if you are, then I would probably say this 127.50 area is probably the best area to look for any kind of long trades, and any short trades and any long trades, looking for probably a pullback into this 124 area for a buy. Moving on to the New Zealand dollar, US dollar, and the New Zealand dollar again is one of my buys, just not against the US dollar. So we did have again some positive news come out, and we've sold off for the US dollar is kind of increased in strength. But from the perspective of again, two central banks looking to hike rates, and the New Zealand dollar, the Reserve Bank of New Zealand, are probably going to be one of the first to potentially hike rates, maybe at some point this year, is the rumor. Could be this month, or it could be in I think it's like September, October, if not this month. I think this month might be a bit too premature, but if they do, then you should expect really prices to rise, and the New Zealand dollar to appreciate. But again, with two central banks looking to hike rates, for me, this is more of a difficult read. I'd probably my bias is skewed more towards the New Zealand dollar buy. So any kind of moves into a demand zone is really where you should be looking. And let me just tidy this chart up a little bit. If anything, I probably have to pull this up to here, and it's going to be I think this whole area really is going to be demand right there. So let me just get rid of this. So it does look a bit messy, but at the end of the day, this is the way we draw our zones, and we can always clear and clarify whereabouts in this demand zone we want to be buyers by looking at things like horizontal support and resistance, both on the daily and also some intraday zones as well. So within that demand zone, where exactly do you want to be a buyer? And that's where you use support and resistance from the horizontal, diagonal, and also things like moving averages to decide where you want to be actually a buyer within this zone. But overall, it's not really a pair that I'm looking to trade anytime soon, as there's no monetary policy divergence. Moving on to the pound dollar. So we had some positive news around the dollar last week. It was to do with the central bank looking to potentially hike rates, and so Bank of England rings alarm bell for Sunak, who is the UK's Chancellor of the Exchequer, that rock bottom rates may rise. So basically, central banks pledge for modest tightening may end the aid, and basically the aid of monetary support, for public finances. So the Chancellor's in a bit of a sticky place because of the fact that he wants to continue the low borrowing rates, but the central bank are saying, well, we might have to hike rates, right? Might have to hike interest rates because of inflation and potential, I guess, the fact that inflation is getting a bit out of hand, so they may have to look to start to hike rates sooner rather than later. So you've got the Chancellor of the Exchequer against really the Bank of England. So with that being said, the rumour is that the Bank of England may want to hike rates. So for me, it's literally buying the pound, but against the dollar, probably, I would say probably, definitely not. I'd be buying a pound against something like the pound against the yen or the Swiss franc. But if you are looking to trade this pair, then any kind of shorts in and around this area or up into this area is where you're looking for short trades. If you're looking for long trades, it's really a pullback down into this 137 area if it gets down here for a long trade. But again, not really a great pair to look to trade. Euro dollar, and again, you can see the effect of monetary policy when the Federal Reserve came out back in June talking about potential tightening and tapering and potential hiking rates. You can see pretty much what's happened. The European Central Bank, on the other hand, are very dovish, right? Very dovish, meaning that they're not looking to hike rates or even think about tapering at all. And they won't rush, ECB, European Central Bank, won't rush to signal future of pandemic program. So, given how much uncertainty, given the uncertainty, given how much time is left, there is no need to decide on that, says Kazakhs, who also leads Latvia's central bank. We will discuss it at the moment, but at the moment it would still be premature. So they're talking about the bond purchases that they're doing, and potentially reducing their bond purchases. So policymakers have set up their September meeting with new forecasts will become available as a crucial session to scrutinize the euro area's economy and its prospects, and to start debating post-pandemic monetary stimulus. So again, they're talking about the whether they're going to still support the economy and buy bonds, or whether they're going to reduce it. But they're not thinking about it. Or they're going to maybe announce it in the future, whereas the Federal Reserve are really kind of announcing it now. But they did say that where is it? I think somewhere here there's a quote that talks about it goes, yes, is it? It's quite unlikely that we will come out in late March 2022 and say this is it. We've done our job and we terminate it, Kazakh says. We would like to warn the markets in advance, but only as much as reasonably possible. So what he's saying is that if they are going to reduce, bond purchases and taper, then they would they're going to signal that they will. They're going to tell the market that they will. But for now, they're keeping stum on it, which means that they're lagging behind, which obviously is the reason why you're seeing this happen, right? Euro's getting weaker and the dollar is getting stronger. So prices came up to this nice supply zone again from last week, and if you guys were looking to sell, well done on that trade right there. Potentially looking for any kind of buy trades. There could be some profit taking here, but I think the path of least resistance for now is to the downside until the European Central Bank start to get a bit more hawkish. I think this really is going to continue going to the downside, or unless the dollar actually misses any kind of data targets. So those are your options really, but I think the path of least resistance is to the downside and will continue to be. Euro yen are stuck in a bit of a range, this range between the supply and this demand zone. We've got, let me move this up here slightly. Here we go. So again, with both really currencies quite weak in a sense that the European Central Bank are quite dovish, and also the Japanese yen are very dovish as well. So when you have two depreciating currencies, you should actually enter into some sort of range. So really nothing to write home about with this. Not really a pair that I'm really too interested in at the moment. I do think though, once the euros start to become hawkish, then I do think that this pair is going to be a really good pair to look for buy trades. So any pullbacks, and you want to try and get in early and anticipate some European central bank hawkishness, and any pullbacks to these 128 levels will be a decent opportunity to look for any kind of buy trades. If there's risk off comes into the market, any pullbacks into supply zones will be a sell. Aussie dollar and the Australian dollar, pretty much the RBA are quite dovish. The Australia suffering with some more potential lockdowns from the virus, and the RBA have come out and they are pretty dovish as well. They're in a wait and see approach, whereas the Federal Reserve are looking to again hike rates at some point soon, and I say soon, but within maybe another year or two. So they're really ahead of the RBA for now. So again, the path of these resistance, it looks like it's to the downside, and until the RBA really start to become a bit more hawkish, then I think there is some upside, definitely a lot of upside. And again, the Australian dollar has lots of upside potential, but we have to wait for the data to support that potential rate hike, or at least bond tapering narrative. So until that happens, again, the path of least resistance I think is to the downside. So more downward pressure probably on the Australian dollar against the US dollar. But again, if you want to be a seller, then I'd probably recommend not financial advice of course, but this is going to be the area that you'd probably want to look for any kind of sell trades. Moving on to the Aussie yen. Again, my bias would be more to buy the Australian dollar, but with the Australian central bank not being as hawkish as expected, I think if any kind of pullbacks are really some decent buying opportunities, because I do think that the Australian dollar should come good at some point within the next few months. But I think in the short term, it does look like the Australian dollar might be slightly a bit weak. But with against the Japanese yen, I think it still should potentially have some more upside potential, or at least range probably from here. But any kind of pullbacks into any demand zones, I think, are buying opportunities. I wouldn't necessarily look to buy it again unless, again, there is a lot of risk off sentiment. Moving on to gold. Finally, gold again moves inversely to the dollar. We did have a couple of weeks ago a nice little buy trade as prices come down into this demand zone, and then as prices come up into the supply zone. Again, if you were looking to sell the dollar, then you're looking to the play is to buy gold. Or if you're looking to buy the dollar and you can't get in on buying the dollar, then you're looking to sell gold. And this is basically what's happened. Gold is a hedge against inflation, but with the central bank, the Fed, looking to hike rates at some point, money will be coming out of gold and going into the dollar. Reason why is because the dollar but it pays a yield, it pays an interest, whereas gold doesn't. So investors generally want a return on their investment, other than just looking at holding, and asset appreciation. So with that being said, with the dollar strengthening, you're seeing gold start to sell off. And if you do want to be a buyer of gold potentially, meaning that the dollar, you think the dollar is still going to stay a bit weak or maybe turn around this week, then this is actually a really nice zone to look for any kind of buy trades for gold. But personally, gold isn't necessarily clear cut. I think the bias is really with dollar strength at the moment, so we could see more short trades coming into focus. So any kind of pullbacks then into that demand zone, probably from the 1810 area around here, that would be a potential selling opportunity if you have the medium to long term view that the dollar will strengthen and gold should weaken. Anyways guys, that's it for this week. Again, hope you have a great trading week. Don't forget to like, subscribe and share. Take care until the next video.